Did you know central banks now favor gold over U.S. Treasuries for the first time in decades? Geopolitical tensions and a weakening dollar are reshaping safe haven demand. Gold and silver are surging. Platinum faces its steepest supply crunch in 20 years, and silver's deficit is the largest ever. Risks are rising. Gold provides ballast, silver adds torque, platinum brings value and hydrogen optionality, while palladium faces substitution risk. Structured sizing and risk bands help avoid chasing momentum. Discipline is key as volatility rises. Major September catalysts FOMC, CPI, PPI are ahead. Review your metal sleeve now for resilience.
Right, welcome everyone. Today we're diving into quite a fascinating topic that's shaking up the global financial scene, specifically the shift in central bank reserves from US Treasuries to gold. This trend is monumental, and we haven't seen anything like it in nearly 3 decades. Just picture waking up one day and discovering that your trusty old car has suddenly been replaced by a sleek, upgraded electric model gold in this case. So, let's explore the reasons behind this significant shift.
Wow. I mean, gold overtaking US Treasuries? That's wild. Why now, specifically? Is it just about the dollar getting weaker, or is there more to it?
Great question. It's really a combination of factors. The US dollar has dropped by about 9.6% this year alone, which definitely gives gold a shining appeal as a safe haven, especially in these tumultuous times. Think of it like this. When you're on a roller coaster and that safety bar starts feeling a bit loose, people are naturally going to look for something more reliable, something steady in their lives.
Right. As the safety bar starts to wobble, everyone starts eyeing the exits. So what are these geopolitical risks that are making people so jittery?
Exactly. Geopolitical tensions, particularly the US-China trade war and Brazil's responses to US tariffs, are significant factors. These tensions create an air of uncertainty that makes gold sparkle a bit brighter in investors' eyes. It's much like when a storm is brewing. You suddenly want to be indoors, safe and sound, rather than out in the open.
Oh, absolutely. We'd all prefer the comfort of home during a storm. So if more people are leaning towards gold, what does that mean for silver and platinum? I mean, are they going to follow the same path?
Yes, very much so. Silver has also skyrocketed, reaching about $39.335 an ounce, driven by a historic supply deficit, particularly in the green energy sector. It's akin to when a new trend takes off, and suddenly everyone wants to jump on that bandwagon. And let's not overlook platinum. It's currently navigating its worst supply crisis in over 20 years due to heavy dependence on the automotive sector.
Whoa! So, silver is like that trendy new shoe everyone is wearing, whilst platinum is struggling with, let's say, an old model collectible car? But why does the automotive sector impact that so much?
Spot on. The automotive industry consumes a substantial amount of platinum for catalytic converters. With the push for electric vehicles and tightening regulations, we're observing a decrease in platinum demand. Imagine traditional cars being replaced by electric ones. All these factors lead to a dwindling need for platinum.
But what about palladium? I heard it's a bit of a wild card in all this.
Oh, absolutely. Palladium has stabilized somewhat, yet it's still deeply affected by market conditions and reliance on gas-powered vehicles. If palladium were a contestant on a game show, it would be hanging by a thread. Any sudden shift, especially with the rise of electric vehicles, could leave it even more vulnerable.
Right, so it's like balancing on a tightrope. So what does all this mean for investors? Should they be jumping on this precious metals bandwagon, or is there a strategy involved?
Fantastic point. It's absolutely about diversification. Investors should still maintain a solid foundation in gold, without a doubt, but they can also strategically hold silver and consider platinum and palladium for potential growth. It's like cooking a stew. You need a variety of ingredients to achieve that perfect flavor, especially as geopolitical tensions rise. A well-diversified portfolio can act as your cushion against market volatility and inflation.
I love that analogy. Like making sure you have that pinch of salt, the herbs, just to make it all pop, right? I'm curious though, with all these changes, is there a historical precedent for this kind of shift in investment strategy?
Absolutely. We've witnessed similar moves during periods of economic instability. The 1970s, for instance, saw high inflation and geopolitical crises that drove gold prices upwards. So what we're seeing now isn't unprecedented, just another chapter in the ongoing saga of global finance. Economic cycles resemble the turning of the seasons. They continue to repeat.
Wow, that really helps clarify things. So it's like we're in another dramatic season in this financial series. I'm genuinely excited to see how this unfolds. Thank you for sharing all this knowledge.